All right. Good morning, man. Welcome to our daily analysis that we do each and every single day. Trying to check in the market and trying to analyze some few trades, and then from there, people can be able to actually take advantage in terms of analysis and be able to use them for their benefits to trade. Today is Tuesday. Not that much in terms of volatility in terms of the trades, because if I check it on a news channel so that I can see which let me go to, if I go check it on a news channel, I don't really actually see much of high impact volatility that are currently happening. But what I'm looking at in the morning, I'm seeing Tokyo CPI year to year that is going to happen already. I think it happened already in the AMs. And also I'm looking at Australian dollar is going to have a retail sales around 230. And again, 10 a.m., we're going to see a Swiss franc having a foreign currency reserve. So those are one of the things that I needed to check it out in terms of how the news they're coming and what type of instrument should look up to today and be able to capitalize. So without wasting time, I think we should just jump in the markets and look on this specific news. Okay, let me do this so that I can see clearly. All right. So the first one that we see, it was a Swiss franc. So I'm going to look into Canadian dollar versus Swiss franc. As you can see already, there's a volatility. It shows that today there's a little bit of an activity in terms of the Swiss franc. They're dropping actually the retail sales that are actually dropping today. So as usual, how I analyze it is very, very, simple. First of all, I need to look into time frame. If you see it right now, it's playing around on a 5 minutes time frame. These are 15 minutes, 30, 1 hour, 4 hour daily. As a day trader, I always go jumping into day time frame, but mostly because of how people are actually participating in the markets. So I prefer to go on 4 hour time frame, right? So when I'm on a 4 hour time frame, first of all, I need to identify where the market is coming from. So now I'm identifying that the market is actually coming from this area, drops, which was 26 December, try to play around at these levels. And again, this is the flow of the market as well, of this instrument of Australian dollar, Canadian dollar versus Swiss franc. So what I do again is to identify the lower level of that Canadian dollar versus Swiss franc. And again, I can see it tries to break at these particular levels, but it actually, fell. Every time when it tried to break, it pulled the data all the way up and then closed the market price above where it actually, opened and start following another different, direction. So that's where I need to identify that the market hasn't been breaking at this level, at a level of 0.63187. Very, very key point, to identify. The third thing that I need to identify as well is because of how the market has been playing around at this particular level. So you can see from 29 December all the way up to now, the market has been moving around from this bottom all the way up, trying to come back in the bottom, goes all the way up. It hasn't get to the position where it was on the 26th of December. So we're still waiting whether the market is going to break at this position or continue going back to the 26th of December. But this is actually need to happen today, because of today that it's the day where, as we said, it's going to be in terms of Swiss franc, a foreign currency reserve news that is actually coming today. Around I think it's already dropped. Maybe that's why we can see high impact volatilities like this. So now, what else should we identify? I'm going to identify as well a certain position where the market has been actually trying to break but failing. If you see this candlestick, it did try to break but didn't. This one that does break, but because of the data from this side, it pulls all the way up. So this position now become the most important position. Now, what I need to do Let's go back to 1 hour, trying to see now my setup. How did I set up and where exactly can I actually, trying to take advantage in terms of if I set up correctly or not. So I can see again that there's a certain position that I need to identify. This is also the position. The reason being is because of these candlesticks. These candlesticks didn't come all the way down. It ended here, breaks a little bit, come back, this one break, another one goes all the way down, but still again, open with another candlestick that goes up. So this is very, very respectful area as well, or respectful zone as well at this particular zone of 0.63869 to 0.63187. So now I'm gonna go back to 1 hour time frame, trying to check if my setup is okay now. Go back to 30 minutes time frame, trying to check if my setup is okay. Again, I'm gonna execute at the 15 minutes. So now I can adjust my setup. Now I can see that, okay, the market goes all the way here, trying to break, it fails, it confirmed with this type of positions that it did the same thing. Now it shows me that the market is trying to come back to this position. But the most important position that I'm actually looking to actually hit is this position, right? So if I'm taking a sell from this position, 0.63278, it will be my biggest take profit. It will be my biggest take profit. Remember, if I enter a sell at this particular time, right, the market is going to move all the way down, come back to this position, right, of 0.63432. Already, you'll be already in the profit. Once you get to this side, you'll be in the profit. What do you do now? You can now put your roller stop at this position at 0.63532. So what it means, you actually, if the market is here and you lock your profit at this position, you have locked your profit. Now what you need to do is to monitor your trades if it's going to break here, this level. So let me identify again the position that you need to check if the market is actually going to break or not. All right, maybe I can change the color, trying to put different color maybe. Let's see. Okay. Okay. Let's see. All right. So this is the zone where you're gonna expecting for it to break the zone, right? Once it break to that zone, remember you already in profit if you entered at that position that we said on top, or the position of 0.63532, right? Once you enter that position, by the time the market get to breaking zone, okay, you do add more trades. Okay. So once this is a breaking zone, if you enter at this position, the market will come all the way to 0.63432. Once it gets to 0.63432, you put your stop loss, it's called the roller stop, put a stop loss at this position. What it means is actually you have locked your profit. Even if you throw your phone in a dustbin, when the market goes all the way up, it will hit the stop loss. You're still going to close at a little bit of a profit instead of a loss. But that's not most important. The most important, if it breaks this zone, once it breaks this zone, you see this candlestick. Once it does come to this level, but don't do the way this candlestick did, right? It actually means you can add more trades because this will be your new take profit. So this is actually nice, very nice setup. To be honest, you actually know you enter now, you make a profit. Once it break here, you make more profit and you add more trades. You are targeting to get to 0.63278, 0.63278. So yeah, man, this is my setup number one in terms of Swiss franc. Because of the Swiss franc, they're actually having an interesting day today, which is the foreign currency reserve. So we are expecting a higher volatility, you know, to show us in the market. So this is my setup, anticipating the market to drop today in terms of Canadian dollar versus the Swiss franc. The second one that we're looking at, remember, we saw the JPY, Japanese yen, actually bringing the earlier hours, bringing the CPI, Consumer Price Index, year to year, released the early hours. And again, most interesting, it's Australian dollar that are bringing also another interesting news around 2:30, which is retail sales, right? So why not checking these two instruments, Australian dollar versus Japanese yen? The reason why we are trading or we are looking in this type of instrument, it's because of this is the instrument that will bring the volatility. So the more you are in the game of the instrument that brings the volatility, the better for you, instead of just holding the instrument for a very long time without seeing the profit. Okay. So now, once again, my style of trading, checking the time frame, go to 4-hour time frame because it's the biggest time frame that I need to look the market into. First of all, identify the highest level of the market has been gone. And again, identify the lowest level of the market so far has been actually performing. But in between of this, there's also higher highs are there, lower lows are there as well. So we need to identify these higher highs as well. You can see here, and identify as well the lower lows that I'm seeing at particular time. The reason why I'm putting here at this position, remember, this is where the market spend a little bit of time. Again, this is the place where the market spend a little bit of time. Again, it confirming at the same time, even today, that this is the zone where the market is spending a little bit of time. But if you look at it on a 4-hour now, it's showing you actually whether triple top, 1, 2, 3, right? Triple top. Now the rules of triple top is that once it does that, it actually shows you the strongest reversal of the market, right? If it was a double top, still strong, it's a reversal of the market. If it is a triple top, that's the strongest reversal of the market. But again, we are looking at a bigger time frame. We want to go in on a 15 minutes time frame that we can make some money and be out and jump in again, make some money and be out and jump in again, right? So now let's go on a 1-hour, trying to see already, we can see where the market it is, where exactly the market is sitting, 96.482. And we are actually saying that this is the zone where the market it needs to break. This area, the market needs to break. Once it breaks at this area, we know the confirmation has been made. So let me mark my zone area. Here we go. Let me put this. Okay. Here we go. So that means here's where I'm anticipating that the market, once it break at this position, this is my highest take profit at the moment. So again, we are confirming with the triple top that we saw, that is this really a sell at particular time, or it's a sell in a wrong run, right? So we go in a 30 minutes. So you can see in a 30 minutes that the market, it's actually waiting to break at this zone. So let me go on a 15 minutes and see again. Okay. All right. Okay. All right. So when the market is at this position, it's very important to understand that do not start jumping in the market and open the trade immediately, right? What you need to do is actually to be patient and wait until it breaks, right? It is going to tell you, because if you go on a smaller time frame on a 15 minutes, you don't see the other positions below on this because of your viewing in a smaller time frame, right? Now that means you don't know if the market is going to break here and continue going all the way down. But if you go on a bigger time frame, you can see that this is the gap that we are anticipating that the market will come in. So what you need to do is to wait for the candlestick breaks and below this. Once the candlestick close below, whether it's the 1 hour candlestick or whether you're going to monitor it on a 30 minutes candlestick, once it actually breaks below 96.410, now you can confidently enter your sell and expecting the market to come to this level. This is really, really technical trades, but easy also at the same time, because a lot of people, they make a mistake on entering the trade at this level. This level, you watch the market, you wait the market until it confirms. Once it confirms, that's where you jump in to get in the market. Now, you will see if it doesn't confirm, if it doesn't break. So let's say we're doing the possibility of that it doesn't break, right? If it doesn't break the market, ending up like this type of candlestick, we should definitely know that the market is no longer going down. It might again go and retest at 96.935. So you have clear, nice setup here. What you need to do is to wait whether it will break or it's not going to break. If it will break, you enter your sell, you go with the market. If it doesn't break, you enter your buy, because it's going to retest again at 96.935. So if you can see it on a bigger, on a smaller time frame, you can see already rejection is showing, right? On a smaller time frame is rejecting it. If another candlestick comes in and again you confirm of rejection, right? Whether on the 15 minutes, understand that now the market is start going all the way up. Higher possibility that if it rejects, it will go to 96.940. So yeah, man, these are two in terms of analysis, technical analysis of Canadian dollar versus Swiss franc and Australian dollar versus Japanese yen. The reason why we're looking into this is because of Swiss franc. They're having they already released the news today, and again Japanese yen, they already released the news of the CPI year to year. And also Australian dollar, they already released also, the news. So that's how the market is looking in terms of the currency pairs at this particular time. So again, yesterday we're looking at NASDAQ and US30. Okay. All right. Let's do this. So yesterday, we're actually looking at the market in terms of NASDAQ and the US30. We did analyze it, and we saw the market goes all the way up, spiking exactly the way we analyze it to get to this level. Today, because of there's no much in terms of volatility of US, what I'm anticipating is the market to do a little bit of reverse to this level. Once maybe it did a little bit of reversal, let me say maybe this position in terms of NASDAQ to 16,468, touches there, test there, maybe it can also go up, just playing around until tomorrow. That's where there will be a CPI. Tomorrow there will be a CPI, Consumer Price Index from US. So that's what I'm anticipating about the NASDAQ. In terms of the US30 as well, not much of volatility. I think it's just recovering what has been happening yesterday. And pretty much I can say, let me see, can say maybe it's trying to get to here. trying to drop a little bit and, you know, get to this level of 37,278, which is some quite pips. But obviously, because of not much volatility, it will be actually, you know, moving slowly but surely, getting to this position, and then it can start making a decision. But you still can make money at these positions that you are seeing of US30. I'm already in a trade, as you can see, already in a profit. When it comes to NASDAQ as well, I'm already in a trade, already in a profit. You know, if the market goes all the way here, or even the interesting part, it can even touch this level. It can be able to come to this level. That's a very, very big amount of money that you can collect, you know, to this move. So yeah, man, thank you very much for actually, you know, tuning in, and keep subscribing. This is the daily analysis that we are bringing, so that you can be able to look at it and jump in the market every day, daily, and start making actually, you know, those profits.